Good morning, everybody. This is Jeff Diorio from Treasury Strategies. Welcome to our March 2015 technology briefing. Today we're going to focus on technology selection. If you're considering a complete overhaul of your technology or you're really just looking at fine-tuning, this should be very informative for you. I'm joined today by my colleague Elaine Filas from our Treasury Technology practice. We're also joined by special guests Lynn Riley of EMC and CJ Held of TIAA-CREF. Lynn and CJ have both conducted system selections recently and have agreed to share their experiences and lessons learned with you. Before we start, a few logistics. We will finish in 45 minutes. We welcome any questions following the webcast. You can submit them online or you can email them to us afterwards. We will reply off the air to keep our session on time. And a copy of this presentation and the recording of it will be available on our website. So to get started, the agenda today is to review drivers from a couple of our recent surveys and what we're hearing in the market as to why companies are looking at technology this year. Then we'll get into the selection process, considerations that you should think about going into it, and things to avoid. The third part of this will be the corporate experiences that CJ and Lynn have had, and then we'll get to things you should consider, things to do at the end of the process. All right, first we're going to discuss current technology drivers based on some research we've conducted. We recently conducted our annual State of the Treasury profession, and we spoke about it a few weeks ago. At the bottom, you'll see the core areas that organizations are looking at in 2015 that they'll be working on. This is the points at the top are the items that our clients and other organizations we've spoken to have said are the drivers for technology. The evolution of their treasury operations and structures is a big factor. So things like shared service centers, putting in netting, pooling, in-house bank, and other items which get covered as a response to the financial crisis are things that have been and will continue to drive change. Regulatory requirements are still a big issue and continue to be. Firms are looking for more real-time visibility and risk exposure. On the cyber risk front, this has, of course, gotten a lot of attention recently. Technology is a big component of your protection strategy, and I highlight the word component on purpose because your protection strategy really needs to be multi-layered. Better management tools is a big thing, and efficiency, controls, and visibility. So we are seeing a lot of organizations focused on streamlining their bank connectivity and their payment process and things like that to both make them more efficient for the company, give better value to your business partners within the company, but also to add control because going back to the cyber risk and some of the concerns firms have had. On the areas at the bottom that firms have said they're focused on addressing this year, all of them have a technology component. Okay, on the next slide, Elaine's going to talk about a current survey that we are doing.
Yeah, thanks, Jeff. The survey that Jeff mentioned is still underway, but we're already getting some interesting insights into what companies are hoping to achieve with technology and some of the influences that are driving their current technology investment. We have over 200 responses so far, and we see actually surprisingly that there's still a strong dependence on bank online platforms and unfortunately Excel, despite the inherent risks, in these tools. Excel is mentioned most often as the primary technology tool even though, there are significant risks of human error or corrupted links and formulas in those spreadsheets. And having a large number of people with direct access to banking platforms certainly can give your auditors concerns, not to mention the impact of those platforms on your staff efficiency when there are multiple platforms that you have to dial into each day, and then on bank fees as well. But, interestingly, almost all respondents agree that technology, can be leveraged as an agent of change. And they're specifically looking to technology to help measure and manage financial risk, improve their visibility to corporate cash, streamline operations, and help in the area of regulatory compliance. So that's the Treasury setting at this point in time, and that actually perhaps explains why we are seeing a lot of clients embarking on Treasury technology selection projects. So let's talk about the selection process. Certainly embarking on a TMS selection is a complex decision, and it will be costly. It's a costly, a high investment, and one that can have a significant impact on the strategic success of your Treasury. So how do you make sure that your investment and hard work pays off? Well, before you begin to draft your RFP or schedule any demos, there are a lot of questions that you need to answer. The first 2 points on the slide here get to your, what is your vision for the future? What is it specifically that you want to achieve? How do you define what the future state looks like? And as part of that, you really need to take an honest and informed look at your current operation and decide, what parts do you want to keep, but then look at what needs to be fixed and go about fixing it to the extent that you can, even before your selection. We've seen many clients try to automate broken processes, but avoiding this will certainly simplify your selection and your implementation. Clarity around those goals, will give you a base on which to build a comprehensive business case. And that should include both qualitative and quantitative costs and benefits. You'll need to think about how this initiative will address senior management's goals too, since obviously they're the ones who control the project funding. So including this information is critical in securing management buy-in to proceed with the selection. Then there are technical questions about bank connectivity, FTP, SWIFT, Service Bureau, there are a lot of options there, and then requirements about controls. Certainly controls on system access and transaction processing, but then also measures to ensure the security of the data in the system. As Jeff mentioned, cybersecurity, cyber risk is certainly getting a lot of attention these days. And then you'll also need to think about what the new solution architecture might look like. Are you shopping for a single solution, or do you have existing technology tools that either you developed internally or other applications that you've purchased from a third party that you want to keep? If that's the case, you'll need to think about what level of integration is required. So a single solution, multiple solutions, all of this will go into helping you decide who to invite to the party, the selection party, as it were. And Jeff will talk a little bit more about that.
Yeah, thank you, Elaine. There are companies are surprised by the number of options they have for technology. TMS is primarily the focus. There are a lot of solutions out there. There are the legacy vendors who've been around for over 20 years and are providing excellent solutions to a lot of companies. But there's some new players in the market. There's some organizations that have just come into the market, and then there's firms where they're expanding globally. And so there may be some organizations out there that you're looking at that have done business in Europe and are now doing business in the U.S., or vice versa. These aren't all of the potential options. We're not talking about things like EBAM or bank account analysis. They're sort of embedded in here a bit. The primary category would be TMS, but you have a lot of other things you could do. So if you're not looking to do a complete overhaul, you might be looking for a bolt-on or something to evolve part of what you're doing. So you've got, things like firms are upgrading their bank communications. That's just a component of the overall TMS and Treasury solution. Or they're enhancing STP with things like electronic trading or applying an investment portal or automating settlements. We see companies looking to add control to the payment process, and that is causing them to reevaluate certain things like the services they're getting from the banking systems, or enhancing the operational controls, which might include an impact to the bank communications or the banking systems. And then the other thing we're seeing companies do is if the core system's working fine and they're really just looking for enhancements in certain areas, in some cases you can outsource some of the technology or reporting or even hedge execution to some outsourced providers, and or hedge accounting is another big one that we see folks just splitting out if the core cash system functionality and everything else is good. Okay, on the next slide, Elaine's going to talk about some more considerations.
Okay, thanks, Jeff. Yep, there's even more questions that you need to think through as you work through your selection process. More technical points that relate specifically to your IT department. How is your internal IT support? Do you have any? Is it something you can leverage, or is it something to replace with a technology vendor, and you can depend on them to provide IT support for Treasury? Will IT try to mandate the Treasury module of your ERP? And Lynn from EMC will have a bit to say about this in a few minutes. Certainly we see many, for instance, SAP shops where IT says to Treasury, you need to use SAP Treasury, period. You'll also need to define, upfront what other internal financial systems you'll need to connect with. Will your TMS need to connect to the GL or an AP system or some intercompany loan system, whatever? You'll need to think through all of that integration. There's also the perennial question about, do we do an install or an on-premise solution, or go the hosted or SaaS route? Each option has its benefits, and the answer will, in some cases, certainly narrow your choice of vendors. The level of customer service, that's best for your organization. In some cases, it may be better to be a big fish in a small pond. In other cases, the depth of a large pond may be better to meet your company's needs, depending on your staff, your internal resources. And who to involve. This is a key question. This is not just a Treasury project. There are a number of internal departments that you should connect with as part of the process up front and all the way through implementation. There's accounting issues, there's auditors who will have some concerns, connections with AP, AR, SOX compliance. You really need to get those areas buy-in as well on this project. So when you include these factors in your preparation, you're much less likely to fall prey to some of the hazards that can befall a technology selection. And I'll turn it back to Jeff.
Thanks, Elaine. Yeah, there's a lot of things to avoid, and we can share with you some of the stuff that we've seen right up front. And I think Lynn will talk to this a little bit. We see that inadequate project funding or competing projects actually stop you from getting your projects done. And I can tell you, in the last several years with the budgetary crunch, a lot of firms have had these TMS improvement or Treasury automation improvement projects on the shelf. They want to do them, but they haven't had the wherewithal to get to it. So that's something you need to deal with. Lack of clarity on requirements gets to too many times we see organizations just invite a bunch of vendors in and say, show us what you've got, and then we'll make some decisions about which one's the best fit. And that's not a bad place to start, but I can tell you we've been brought in so many times after that where firms have said, oh my gosh, I'm so confused, I can't make heads or tails, they all look good, or I can't tell whether we're focused on the right things. So getting clarity is something that's important. Team agreement, and this is consensus building, it's important to start consensus building at the very, very beginning. You know, everyone wants their cake is the phrase here, but it's also important to listen to everybody, because at the end of the day, your automation project will take care of a lot of what you're trying to accomplish, but you know, it won't do everything, and you shouldn't expect to have a 100% perfect fit. So you need to make sure that everyone is part of the decision as to what is in and what is out. Now, the next point is a little prickly. It's miscommunication. Lots of times, you know, you're focused on what your issues are and what you think the system's going to do, and then as you get into the project, you find out, oh my goodness, it doesn't do this key thing we want. And the point here is it's not just overpromising, it's communication. I guess the easiest way to explain this is, I've been married well over 25 years, and you know, sometimes I'll be saying something, my wife will be having a conversation with me, and we'll both be misunderstanding each other, even though we think we're talking about the same thing. And I'm sure that one resonates with some of you. It happens all the time, and so you need to be careful in this one, because you've got certain needs and desires you're looking for. And I was in a seminar just the other day in San Francisco, and somebody said that this had happened to them. So they felt the system could handle something, and then when they went to deploy it, they found out, in fact, it couldn't. And then there's the last point here, which is it is difficult sometimes to get a handle around what the true costs are going to be. And that takes some effort. We just finished a project with a firm where we were only brought in to help them validate and make sure that the pricing that they had was correct. And so, you know, making sure that you're considering everything is key, and of course, nobody wants to pay more than they have to. Okay, now we're going to get on to some corporate experience. So first up is CJ Held of TIAA-CREF, and they finished their selection well over a year ago and are actually now done with the implementation. So CJ, would you share with everybody, you know, what your reasons were for looking for a solution?
Certainly. Good morning, everybody. So we did have some primary goals that we wanted to tackle when we were going through the selection process. Primarily the first item was we had an existing TMS that we wanted to replace. It was outdated, unsupported, and just wasn't meeting our needs anymore. We were also looking to consolidate many of our systems to support that legacy system. It was actually separated into multiple systems, and we wanted to consolidate it all into one system. As kind of noted earlier in the presentation, we also had a heavy focus in Excel, and just like it was mentioned, there was a lot of inherent risk when working within those Excel spreadsheets, even though many of our spreadsheets were locked down. Whenever you're talking about Excel, you're also talking about an increase in manual efforts. One of the nice things that we were looking to kind of streamline was getting away from Excel, getting away from the manual efforts, and moving towards a system that would allow us the ability to focus on more value-added activities as opposed to just manually plugging in information. With all of that said, we also were looking to implement a straight-through processing through to the bank, getting off of the proprietary bank systems. This also included an adoption of a new bank connectivity that went through SWIFT into our TMS. And this would, in turn, reduce the number of people on proprietary banks and give us a more centralized location for all of our file management, including the bank administration piece.
That's great, CJ. So what were some of your concerns and objectives during the process?
So initially, TIAA-CREF, we did a self-analysis back in 2010. We researched possible vendors. We didn't really understand all of the players, all of the options that were available to us. We did have a few, actually I would say a large number, provide us with a web demonstration of their systems, and we were able to kind of whittle down to a select few. But what we found is that the capabilities and the options that those systems gave us were greatly and vastly more advanced than what we were currently working on. And so we didn't really understand what they could do for us, and that's when we decided it was best to kind of put on the brakes and develop a whole gap analysis to understand what exactly we needed to take care of. So one of the other items is we didn't want to just replace existing functionality, but we also wanted to define the future state of where our department was headed and where we thought our department could assist with the enterprise as a whole. So we made sure that we were taking the time to get a well-defined requirements document, and that way we could go back to the vendors and get a true sense of what each vendor was able to provide. Some of the other ancillary items that were very important to us when we were going through the objectives of the selection process was, what were the TMS's configuration timelines, what were their staffing requirements, how was their training process, and how would they walk us through this system. This kind of helped us to manage and streamline the interfacing within the new TMS.
Great stuff, CJ. So what were some of the lessons you learned during the process, and if you could also, some of the recommendations you have now that you're done?
Yep. So lessons learned, initially when we did it in 2010, we did not get a full buy-in from all of our business partners, and as it was noted earlier in the presentation, getting the buy-in from your business partners is an integral part of going through the TMS selection and ultimately the configuration. This gives, weigh-in from not just your perspective, but from everybody's perspective, and ultimately will get you the solution that I think you'll be happy with. One of the problems that we did run into is it did take longer than we thought to define our base requirements. That is one of the most key components of going through any TMS selection, and without that, you really don't know what to ask the vendors. When you're actually within the selection process and you're having vendors come in to do a demonstration, don't just take yes we can from anybody. Just have them show you real data, meaning your data within their system. That way you get a comfort level of not just a demonstration that they're showing to you, but also they can put our information as we would want to see it, and they're proving out to us that they're not just telling us yes we can, but they're proving to us that the system can handle the capabilities that we currently have and want to grow the new system. Lastly, one of the lessons that we learned that, you just want to take the time to call as many of the business references as the vendors will give you. Getting a good footprint for each system, and don't just call one system, call multiple systems references. That way you get a good understanding from everybody's perspective why they either chose a system or didn't choose a system. Lastly, the recommendations now that we are all done is this is an extremely exciting time. It was a very tough but very exciting time for us to go through this. Go in with an open mind. Don't let your thoughts of how you want to see a system handle your business processes dictate your selection process. Really understand what the vendors are able to offer you and tailor your new processes to how the system may be able to handle it. We found that there was a lot of gains by just kind of letting go of our old processes and letting the new system and its capabilities kind of replace that legacy process.
Mm-hmm.
And that kind of leads into the don't just evaluate your current operations. Be on the forefront of understanding where the business is headed, where the growth is going to be expected, and take the time to meet with your business partners to understand what they've envisioned or what they need Treasury to be able to accomplish within the next few years. That's actually one of the reasons we came up with straight-through processing. Because ultimately, if the system cannot grow with you, then you're going to be replacing it, or you're going to have to start building in manual processes again, which will detract from the whole reason why you went through the selection process.
Mm-hmm.
So one of the last few things that we want to kind of mention is just don't focus on reduction of time and costs through the selection process. If you're only focused on reduction of time and cost or bank fee analysis costs, then you may not be doing as much for your organization as you potentially could. Ask yourself how the system can add value to every business area. And lastly, I think I mentioned this a few minutes ago, once you get into the selection process and you're bringing vendors in, make sure you have your IT business partners involved so that they understand the requirements and can adapt and change as different vendors talk about their system requirements and their system ability.
Mm-hmm.
Thanks so much.
Oops, sorry, Jeff. I was just going to say that's a great segue into our next speaker, who actually happens to be one of the from the IT side of EMC. Lynn Riley is a senior IT business consultant and worked closely with EMC's Treasury group in their selection project, and is now engaged with Treasury to begin the implementation. So, Lynn, thanks for joining us today, and we'll ask a similar question to get you started. Just give us some background. How did this project get started when it did for Treasury?
Thank you, Elaine. Good morning, everyone, or good afternoon, depending on where you are. I don't know if most of you are aware that EMC is quite a large corporation. We have over 70,000 employees worldwide, and as far as Treasury technology, we are only currently using First from F-Express, and that is just to manage some of the trades within the FX world, whereas our cash operations right now, everything is Excel, just like what CJ went through. So and as EMC continues to grow, we have a lot of acquisitions and mergers. So with that, the treasurer decided to reassess the growth and, of course, the scalability of his operations. So coupled with the fact that First will be sunsetting soon, actually the end of this month, so he decided that we need to take a very, very close look at everything that we do and all the systems that's supporting his group. So with that was the inception of the project.
Mm-hmm, mm-hmm. So what were some of the key challenges that you were faced with?
Well, we, as you know, Elaine, we've gone through a lot of activities that were by the book. In other words, when we looked within ourselves, we realized we don't have the all-inclusive expertise of all things Treasury. I mean, everyone worked within their siloed department or group. So we thought we did everything, but there was still a few more things that we, hindsight, looking back, we could have done better. So we brought in consultants, so you can pay me later. So Tia's because we needed to really do an assessment that is against industry standards. wonderful requirements, that Jeff spoke about. And we also have the wonderful, outline of what we need to do in terms of our to-be processes and requirements. However, there were three main challenges. And the first, Jeff alluded to, funding. We created a very strong business case and reviewed it from the CFO to the CIO to the CEO and all of the senior finance and IT managers, meaning VPs, and got all the nods, but when it came to where the money will be coming from, that was an exercise in itself. So that was tough, mainly because it's not an ERP system, and EMC had implemented SAP at the time the year before. So after spending a significant investment on SAP, and SAP also provides a quote-unquote TMS module. So we had to prove that SAP could not provide all the services and support that we need. So that was another challenge, to do a fit gap assessment of SAP prior to engaging all the others regarding, the RFP, the release of the RFP. And the third challenge, and I have to say we are still looking for solutions right now, is security. Not only our treasurer, but some of our board members were very nervous, with the recent security cyber hacks and such. So they're very protective, if you will, of our money. So we wanted to make sure that everything meets our security standards.
Yeah, so, and as I recall, as we worked with you, the SAP exercise and the security exercise added significantly to your timeline, didn't they?
Yes, absolutely. I think we were derailed from our timeline at least 2 quarters, if not 2. Yeah.
Yeah. So, so what would you say your key lessons learned are?
I think that it's really simple. Once again, engage expertise if you don't have in-house expertise, and making sure that you assess not only your processes but your technology and also your org structure. And so when we decided on the TMS, there was not a major, but there was a little bit of a reorg within the Treasury Department to make it more efficient. And then, obviously, if you do have an ERP system that provides the same capability or close to it, you should do that fit gap analysis to prove to especially your IT management that it could or could not meet your requirements so that you can proceed. In our case, and then thirdly, of course, security. We engage our global security group up front, and once we chose the solution, they went in and did like a month-and-a-half in-depth security vulnerability assessment of the solution we chose. So those are the lessons learned. Engage outside expertise, make sure, your existing ERP can or cannot before you proceed, and address the security, and bring the experts in ahead of time.
Great. Yeah, certainly your security assessment of the vendors was the most comprehensive review that I had seen ever, probably. So that was a challenge. So
that was not only the solution we chose was SaaS. However, that SaaS uses a Swift bureau for the, bank connectivity. So we wanted to make sure that from the data, EMC data, from within the system all the way to the bank will be secured, will be protected. So
Great.
there were multiple segments that had to be, assessed. So that, yes, that was very, very lengthy.
So so you can see that the selection process in many environments is a challenging one. So we just want to move on and talk a little bit about our recommendations relative to selection. We figured we couldn't talk about technology selection without actually quickly looking at the process itself, and I think this is one that's familiar to most of you. Certainly the preparation we've spent a lot of time talking about already. There's a lot involved there in getting ready to do this. But certainly your RFP should describe your current situation and your vision for the future. Demos are, it's not the vendor's sales demo. You cannot make a decision just based on that. And we'll talk a little bit more about the importance of scripted demos in a minute. And actually then as your final evaluation, after the demos, there may be a specific function or complex type of transaction that you need to make sure that the vendor you select can do. So in some cases, we even will recommend doing a proof of concept exercise where you will work with the vendor over a week or more to really almost build out a specific function and prove that the new system can handle it. So there are other points involved in that process, but I think most of you are familiar with this four-step process. So let's get right to talking about the factors that we think are critical to the success of the process. Jeff, I'll turn it back to you.
I'm sorry, I'm talking to a muted phone. So one of the things we hear, some of our clients do a business case, and for some, the case is so obvious that upper management are in firm agreement and the budget's there for them. But some of the things you gain from doing a business case is it's sort of a goal-setting exercise. You get consensus, clearly the budget allocation, management buy-in, and it sets expectations for what you're going to be accomplishing. And this is Project Management 101. Make sure that up front you have a clear vision of what you're trying to attain. This is the first step in that.
It sounds like both Lynn and CJ gave good examples of that today.
Yes. The cross-functional team is something else. In a lot of cases, business partners might be left out of the project until later in the process. And, we mentioned, I think Lynn and CJ mentioned, IT, accounting, audit, and in CJ's case, a huge number of internal business partners that needed information or contributed information. So they all need to be included if possible. Developing a comprehensive business requirement, too many times we see organizations where, the different factors within Treasury and within the organization have requirements, and you don't take the time to make sure you've got them all listed or, or prioritized. So this process helps you develop consensus. At the end of the day, the systems do a majority of what you're trying to achieve. Everybody needs to be part of the process, and if they've had a chance to contribute their voice, they won't feel slighted if it doesn't do everything they want. And this also gives you a chance to future-proof your decision. So it's, as CJ said, it's not just solving the problems you have today, but being sure that you're anticipating what's coming. And the final point here is considering how what you're about to do fits with the infrastructure of other technologies that you have. So how will it interface with your ERP? How will it interface with other systems? What external systems do you need it to interface with? So there's a technical design component to this as well as the actual business requirements. Okay. So some of the other things we want you to consider, and these feedback right into what you've heard. So a formal RFP. The formal RFP lets you describe exactly what functionality you're looking for, and so it helps the vendors to show you what you need to see. Too many times we hear, oh, they came in, it looked great, but we didn't get to talk about a lot of stuff we really cared about. And the other item is prioritization. Some items are much more important than others. So when there's a miss, sometimes it's a miss on something small and you don't care. Sometimes it's a miss on something really critical and you do care. So it's good to know which of your requirements have a higher priority or not. Structured vendor demos, everybody mentioned this. So Elaine, do you have an example of some good policies around structured vendor demos?
Well, certainly some of the things that we recommend that clients do is to incorporate into a scripted demo specific data that you have on actual transactions. And we always recommend that our clients use, their more complex types of transactions. Not that you want to try to stump the vendors, but that you want to make sure that you're seeing how the system will deal with your specific activity. Yeah,
and I think CJ gave the example of making sure that you had you'd provided good examples, and I was again a presentation I gave earlier this week. We'd gotten feedback that the hedge accounting didn't quite work out the way they wanted it to. So from the demo, it looked good, but they felt that they could have given some more specific examples to actually help them assess whether or not it met their needs. CJ mentioned references. When you ask the vendor for references, they give you references. The references they give you are your peers. They are other corporations, and what we found is they are very honest and upfront about how they felt about things. But you can also go for peer feedback, and we recommend that. So talking to peer organizations of yours about decisions they might have met or not, and getting that kind of feedback as well is important. Okay, then we get to pricing, and I'm sorry. Prior to pricing, you get to the phase of consolidating your findings. If you've followed a good process, you should have some qualitative information and some quantitative information. And so look to consolidate all that, the pricing, the fit from the RFP, but then the other information, because RFPs aren't the end-all and be-all. They're a component of the decision. And feedback from the demos. When you get the demos, be sure that everybody gets a chance towards the end of each day to talk about what they liked and what they didn't like, because that information is valuable in your final decision. The fit and the comfort you have with the vendor is key.
Yeah, and I think using this information too, it gives you the ammunition to then go back to your senior management and justify the decision that you have made.
Okay, thank you, Elaine. Pricing and contracting, most organizations look for no surprises here, and that's our recommendation. Make sure that if there is some future requirement that you really want, it's included in the contract. And finally, expert assistance. Your jobs are to know how to run Treasury and to understand your operations and the best way to do them. Selecting systems is not necessarily part of that expertise. So having somebody that can make sure that you avoid putting on rose-colored glasses and that you select the right system and project is something we recommend. Okay, well, thank you so much for joining today. I'd like to mention that our next technical briefing will be on May 29th, and we will be talking about system implementations. We also are still conducting our technology survey. that we mentioned earlier on this session. And if you'd like to participate in that, let us know. If you do participate in it, we will make sure that you get a copy of all of the findings from the benchmarking. Thank you so much.